You thinking about buying a house or in the process of buying a house and still kind of confused about what contingencies are? Well, stay tuned. That's what we're talking about right now. Hi, I'm Vito Scarnecchia with Abitano Real Estate here in San Jose, California. And today we're talking about contingencies. If this is your first time here and you want to learn about San Jose and all things real estate, make sure to hit the subscribe button down below and hit the little bell so you're notified of upcoming videos that we do. We post a new video every week and I'd love for you to subscribe. All right, so what is a contingency? I can go into a legalese definition and bore the hell out of you, but that's not what we're gonna do. Contingencies are just periods that we put in place in the contract to protect you as a buyer or seller. And we typically see 4 types of contingencies in order to protect you. And one is appraisal, the second is loan, the third is property condition, and the fourth is the need to sell your house before you buy the house that you're putting an offer on. And since you're probably a buyer or thinking about buying a house, we'll talk about buying contingencies first. Now keep in mind some of the strategies and tactics that I talk about might not be pertinent to other parts of the US, but just important to learn as well. The appraisal contingency is there to protect you as the buyer, but also the lender, because they're only going to lend you money based on the value of the house. So just as an example, let's say you bid $1 million on a house and it's really worth $900,000. Well, you have a choice to come up with the extra $100,000 or ask the seller to lower the price or negotiate somewhere in between. Number 2 is loan contingency, and that's there to give the underwriter time to reevaluate your financial situation and take a deeper look at the house as well. They're gonna intertwine both you and the house to make sure it's a good risk for their investment. And what they're going to do on your side is they're going to look at your approval process again, make sure that you still have a job, that you haven't bought any big ticket items on credit like a 70-foot yacht or an airplane or what have you, or you haven't spent your deposit money, that kind of stuff. And they're also going to look at the house, and they're going to look at the preliminary title report, they're going to look at the appraisal that we just talked about, and they're going to look at inspections if it's on the offer as well. And they're going to make sure that it's a good risk or a good investment for them to put their money on. Real quick side note, I know I mentioned don't go out and buy a yacht or a plane or what have you, but this does happen. People go out and buy a car or a bunch of appliances and they put credit on it, and next thing you know, the underwriter is going to look at it, at your credit report, and you're going to see these new debts on there, and that will affect your ability to pay back the loan. So do yourself a favor and don't buy a new car or appliances or a yacht or an airplane until after you close on your house. And number 3 is property condition, and typically what we do is look for the agent and the buyers need to look through the house and look for anything that's odd or out of the ordinary, but we also have backup with professional inspectors for property and pest reports. And I have an inspection video as well that you can link to down below if you want to learn a little bit more about it. But just understand, in real estate we want to be as transparent as possible so you know what you're buying. And it's important to know what you're buying. Just know that, no house is perfect. You might have some termites, you might have a couple outlets that don't work correctly, and these are all easily remedied. So don't panic when you see a lot of stuff. When I bought this house that I'm standing in right here, there was $20,000 worth of termite damage, and that was 16 years ago. And that's pretty normal. And a good house, on a termite report or a pest report, you're going to see anywhere from $2,000 to $7,000, which is an overpriced bid from the termite company because they can charge you that. You don't have to have the termite company actually do that kind of stuff. Just keep that in mind, and we can get bids to have all that stuff fixed for you. And number 4 is the need to sell your house before you buy the house that you want to move to. And that's simply meaning that you need that wad of cash in order to close on the house that you want to move to. If you do write that as a contingency, You have to keep in mind that that might adversely affect you when it comes time to present offers, because you might have your contingency in place to sell your house, and you might have to compete against 3 other offers that don't have that contingency. And path of least resistance, the seller will probably want to go with the ones with the less issues. It's not unheard of, and I've done it a few times this year, and it's not that difficult. You just have to keep in mind that on the agent side, we do a lot of communicating back and forth, and I'll talk to the listing agent as well as the listing agent for where those sellers are moving to. So we're all talking together and making sure that there's no problems that happen. And if they do happen, we talk about them and we resolve the issues and make sure that it happens. And sometimes there's slight delays, and that's okay. And that's why sellers tend to want to go with purchase offers without that contingency. All right, so we talked about 4 buyer contingencies. The seller contingency is the exact same thing that we just talked about, just kind of in reverse. They need to sell their house, but they also have to buy a house somewhere else. And if they're moving to Florida or Texas or wherever, even down the street, they need to let you know that we're not going to close until they identify a property and get into contract and get past the contingency period before this house can close. Well, that's it. Today we talked all about contingencies. I hope it didn't bore you too much. These are important things to know on the strategy side and when you're writing an offer. So just keep in mind, you have the appraisal, the loan, the property condition, and the need to sell your house. And sometimes you have to wait for the seller to find the house that they're going to move into as well. And a good agent that's communicative and responsive and knows how to work these transactions so that they're smooth for everybody, those are the guys that you want to talk to. All right, well, that's it for today. Thanks again for watching. My name is Vito Scarnecchio with Cupertino Real Estate. And if you like what you see, please subscribe and hit the little bell so you're notified of upcoming videos. And thanks for watching. We'll see you out there. So the first one is appraiser. Appraiser.